Be Wealthy and Smart, episode 1301.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about the S&P 500 making a new all-time high on Friday. That puts the S&P, the Dow, and the NASDAQ all in the positive for year-to-date numbers. We started out the year a little bit rocky, and the numbers were in the red for a while, but now the Dow Jones is up 0.43% year-to-date. The S&P 500 is up 1.48% year-to-date, and the NASDAQ is up 2% year-to-date. The NASDAQ had a huge week, up 4%, as tech continues to keep the lead and have the large tech stocks really pull up the rest of the market. Now, we do have some important economic reports due out this week, which is going to be really important because the Fed is looking at the data. And so far, the question is, when will the Fed start to cut rates? It looks like in the January meeting, there's no chance that they're going to cut rates. There was last week an 81% chance of a rate cut in March, but now that's fallen to roughly a 47% chance of a Fed rate cut in March. That's just the futures markets telling us their opinion based on the data as well. And there's some commentary that maybe the interest rate cuts won't even start until June. The market got a little bit ahead of itself at the end of the year, pricing in steep rate cuts of 0.25% rate cuts for 2024. But the Fed needs to see the inflation numbers come down to match that. So these economic reports this week are going to be really important. Also, traders have taken one expected rate cut off the table, reducing the outlook for easing to 0.25% point decreases from 0.25% decreases previously. And that was because a stronger than expected consumer spending number came in for December. It was 0.6% growth for consumer spending, and initial jobless claims fell to their lowest level since September of 2022. The December Consumer Price Index report indicated that shelter inflation, which accounts for about 1/3 of the weighting of the Consumer Price Index, rose 6.2% from a year ago, well ahead of the pace consistent with 2% inflation. So when we're seeing something that makes up 1/3 of the index up 4.2% over the Fed's target for inflation, it makes the futures market reconfigure the future predictions of what the interest rate cuts are going to be. And until we see inflation come down stronger, it's going to take back some of the interest rate cuts that it had predicted. It doesn't mean that the Fed won't necessarily cut that much, but it's going to get dialed in a little closer to what the data is telling us. A new Labor Department reading known as the New Tenant Rent Index indicates a lower path ahead for housing inflation. The index measures prices for new leases that tenants sign, and it showed a 4.6% decline in the fourth quarter of 2023 from a year ago, and more than double that quarterly. Inflation is being a little bit more stubborn, and Citigroup thinks that might be cause to delay the first cut at least until June. Now, some people are even saying that inflation could give us a spike, in which case the Fed commentary could actually turn to talk about raising rates again. Not that they will, and not that that will happen, but just that that is a possibility, that if we got a short-term spike in inflation, that would be the dialogue that the Fed would have, and that would definitely affect the futures markets and their future predictions on how much interest rates will be cut and when. So these are all things that we're watching. And as we get more data, I'll be reporting into you how things look and whether we're on track for 5 or 6 rate cuts in 2024, and if inflation is still coming down enough or not fast enough, or maybe we might get a number that shows us it's coming down faster than anyone expected. So we have to depend on the numbers, and they'll tell us where the Fed is going with interest rates. So stay tuned for that. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com. Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.